Hello, I'm Elliot Lim. I'm the Chief Customer Officer at Mambu. I'm here today to talk to you about while building societies used to be built to last, now how can they be built to change? At Mambu, we are big believers in that the whole of financial services used to be built to last, but now with everything that's happening with COVID, as well as many other trends within the banking, financial services industry, we think things need to be built to change. Mambu, just a little bit of background, is the SaaS banking platform. We work across fintechs, banks, lenders, and non-financial services, servicing around about 25 million end customers through all of our customers. Really, just a little bit of background. So I've worked 20 years in the banking industry. I worked for Citibank, Deutsche, Barclays, also ran my own consultancy out of London. I am British, so I understand the building society world before joining Mambu about a year ago. For me, this is a really interesting thing to talk about because building societies have something very unique for me within financial services. As I say, I grew up in the UK. My first ever account was a building society account. I grew up in Derbyshire. It was at the Derbyshire Building Society at the time. That was where my savings were put by family and friends until I was old enough to have money myself. And building societies have always been a central part of the community. They were always a trust token. And I think building societies are unique because they still have that trust. They're part of the community. I think 23% of all mortgages in the UK are with building societies. My 3 mortgages when I was in the UK were all with building societies. You know, there's around £290 million held in savings. It's a huge part of the economy and a huge part of the way things are going to work moving forward. So I think it's really important we think about what is right for the future of the building society, individually, collectively, and for the economy of the UK. So really there is a changing landscape. A lot of things are driving this around customer demand, self-service, personalization, a much slicker user experience, advanced technology. Technology has been going at an alarming rate for many years, but have we ever in financial services really harnessed the innovation lens? Have we really been able to drive it in a way that meant we could take more risks, really look at how can we drive through innovation, through, the bigger banks have labs, it's all gone through, there are many areas of the UK where they have fintech hubs, etc. But there is a lot more around digital channels now. Product innovation is really driven forward. And the market and regulatory changes, not just around COVID, but also lots of lower barriers to entry. And where we've seen the neo and the challenger banks start to drive things differently, I think this is where the building societies may have taken a slightly more risk-averse approach than they ought to have done. I think, as I said, I think building societies probably were the original challengers, the original way of doing things differently. They had that trust. They didn't have the problems that the big banks had around lack of agility, the size and everything else. The problems they had were not the same levels of capital, not the same reserves, not the same ability to launch into bigger markets. They're actually advantages, and we really should see them that way. So really, when we look at what is changing, it's that new banking cannot be built the way it used to be. And this is as true for building societies as anybody else, if not more true. It has to be built in a different way that is a different technology, a different business model, and most importantly, a different mindset. So what I'm talking about, okay, building for change, what does it actually mean? Very much around agile thinking. You have to think where you would have had previously a 5-year plan, a 3-year plan. That has to change because we don't have time to adjust. People have always spoke about building for an unknown future. I think we can probably all agree in the last 12 months, we realize now is the unknown future. We are currently living in very unprecedented times where we have to do something differently, thinking differently on a daily basis about our health, our families. We need to do that in the way that we work as well. Need to look at the way that we operate, the way that the world of banking and the whole fintech ecosystem works. We look at the first thing with the agile technology, but actually I think the thinking is probably more important. The technology is putting the cart before the horse. We have to look at this agile technology, build things in a different way, make sure we have what we call a composable infrastructure, allowing you to build these ecosystems for collaboration. But it really has to start with the mindset. That thinking, plus the technology, the collaboration, and extensive differentiation in business models is what builds us for change in the future. It's very much around composable, as I already mentioned. A composable business is an approach that really is looking at, the way we've built things before has been very monolithic. This gives us a way to be rapid, flexible, assembly of independent, best for purpose, best for fit, best for time pieces of the puzzle. So rather than just being stuck with one monolithic beast, you are stuck with the chance to build something very unique. What is it that you can do that changes the way that your customers experience the services you give them today, tomorrow, next year, in 5 years? I think when we look at what is 5 years, 10 years planning now, strategic positioning, what is a bank looking 5, 10 years? I don't think anybody knows. I think we have to look at the fact that these little cubes can be pulled in and out. We can build for today, but with the flexibility and the agility to change for tomorrow and for next year in things that we don't even see need to change at the moment. So let me go a bit more into those principles around composability and composing, because there are several key principles that we really need to think about that sort of underpin the mindset, the technology, and the ecosystem. First of all, as I've already mentioned, the ecosystem beats monoliths. This monolithic thinking of having, picture it as just a cube. You build something, you buy something, it sits there and you're locked into that for 5, 10, 15, 20 years. There are systems in many building societies that have then been there for 20 plus years. And it's very hard if you don't have that technology footprint to really change the way you think. You can layer over it, you can put veneers over it, but generally what happens with that is you add complexity. After the crisis of 2008, I think we all knew a lot of these things, but we still had monoliths. We didn't think about them in a way that really was building agility. We knew there was a problem and something had to change, but we did some things that really did not drive better customer services. We gave white glove treatment to the highest value customers, whatever we decided they were to be. And actually the lower value customers got pushed out the bottom. We added more technology. We got very much around technology being a silver bullet. And we added on top of the monoliths rather than building around it and building those ecosystems. That actually lent to more complexity. And as with the first example, worse customer service. So we're saying that the ecosystem, that agility, that ability to compose what it is you need to build really does beat the monolithic thinking and the monolithic solutions. Every solution within that ecosystem is best for purpose. As an example, Mambu, we know that we are the best at core banking. We know we are the best at core lending. We know that we don't have, and we don't want to have, a front end, a digital channel, but we work with the best in the market around digital channels, credit engines, credit referencing, AML, KYC, whatever it may be. Every solution needs to be best for purpose, best for time, and drive forward that ecosystem that allows you to build what you need to be to satisfy and delight, hopefully, your customers. Also, everything talks via real-time APIs. It's an open architecture. When you look at a technology level, we don't want everybody to be built in. We want the ability to pull in, pull out. We don't want long tie-ins. We want to make sure that you can pull in different parts of the ecosystem. As your strategy changes, as your customer demands change, as innovation changes, as the market, regulation, and everything else changes, you should be able to pull in things very simply. It should not be a re-architecting. It should just be very open, real-time APIs that allow you to connect across the ecosystem. There's also very much around a core reel of SaaS, which is continuous delivery versus big upgrades. A lot of people, when you're looking for new system replacements, I've, as I say, worked in banks for 20 years, you build a business case, you look at return on investment, you look at how you can actually structure this, and you start to measure it. What you quite often missed, or I quite often missed in the past, was how the impact on my business, not just the cost base, the impact on my business and my agility to satisfy my customers when I had to plan in big upgrade paths actually is very, very difficult. And as we move into a more agile world with shorter planning cycles, it becomes more difficult. So a continuous delivery where you're always getting the latest way of working, always getting the latest functionality, always getting the latest benefits is fundamental and very important. Also around scaling. As we say, we don't know what markets are going to do. We don't know how your businesses are going to work. So you need the ability to scale up and down independently. And you also need to align the cost base of that. You need to understand that it's not just about all of a sudden something's happened in the market, therefore our customer base transaction volumes are half what they were. You need to be able to scale that down as a business. But also if you're going to double overnight, you need to be able to scale up. That's very difficult with the monolithic thinking, monolithic systems. You need to plan for those events. As we've already said, you can't plan for those events moving forward, or it's very difficult to plan. So having everything to scale up and down and still integrate is fundamental and important to us again. Configuration versus customize. You should really be able to configure rather than customize wherever possible. The whole point of SaaS is that nothing is customized. Configuration should be built in. That should be built into each system and also in the integration points. It's got to be wherever possible, because there will be times where you can't do that, especially if you are having to plug into back-end legacy or into reporting systems. But we honestly believe that the more configuration you can put in place, the better. And as I've already sort of mentioned, which is around contracts being flexible as the technology. You should not have a vendor locking for 5-10 years. You should have a pure SaaS model where you may be locked in for 2-3 years, but in an ideal world, you're locked in for 1 year. So you have 12 months at any point to work out how you can pull things in and out. It's not just about the technology. It's not just about the mindset. It's the whole way of working, the whole business model, the whole ecosystem. So those contracts, if they're not flexible and somebody's insisting on locking you in for 10 years, I would currently have to question why that is, because actually it's not in your benefit. And then the 8th point really is around basically empowering the self-service. So self-service for your customers, self-service for your staff. Several reasons for this. There is an interesting balance between human interaction and technology interaction. And it comes down to how your customers work, what they think and how they actually want to interact with you. You have to give them the choice. You have to give them the chance to interact the way they want. The bank that I want and the bank and the building society that I want to work with, I would trust my money with and my mortgages is probably going to be very different to what's going to influence somebody who's not worked in banking, somebody of a different generation, younger or older. Everybody's got different ways of thinking, different ways of working, but they should feel like it's being given to them in the way that they want this delivered. So that self-service, that very simple way of working has to fit on a human factor. Personally, I believe there is going to be a huge return to relationship banking. And again, I would re-emphasize, I think that the building societies have always used that. There's always been that relationship. There's always been a way that you can drive something that feels, you can touch it, you can feel it, the human factors. But not everybody wants that. And certainly as you go to the younger generations, they want the self-service of technology, applications, online. But you have to keep that in a way that carries on that differentiation from what are the big, I'll use the word monolithic, the monolithic banks, the financial services that don't give that personal, localized solution that I think the building societies really have driven things forward to. And if we look again at the way COVID has done things, about 9.4 million Brits, I believe, were using new apps, websites, etc. during COVID. Interestingly, that becomes a lot more if you ask people what they're going to use after COVID and how they think they prepare in the future. It's around about 27%. That's about 14.4 million Brits who think they're going to use more technology moving forward. You have to empower everybody to go on that journey in their own time frame. So you have to have that self-service for everyone. So really it is, I've mentioned the thinking several times, that ecosystem thinking is vitally important. You'll see Mambu on there. You will see that a lot of our partners are on there. We look at how do we build those ecosystems that drive the best value. We basically put Mambu as the core, because we believe that the core should be at the core. And then we will drive around what we think is best practice based on what a client needs, based on how you want to deliver. There are many solutions out there that can satisfy pretty much everything you need. And there are many solutions out there that you may not realize you need or may not even exist for 5 years. But you have to have that ecosystem thinking. And actually, where it always used to be that the bank, the building society, whatever financial service always used to be at the core of all this. And then it was basically a vendor relationship out to the rest of the ecosystem. That's not ecosystem thinking, that's vendor relationship thinking. The whole point of the ecosystem thinking is that actually there is nobody just at that center. It is a collective. It's a collective alignment on strategy, a collective alignment on getting to a value outcome. So fundamentally important to think about, what do we need to build? What do we need to buy? Who should we be working with? How does it all link together? And use the collective brain power of the entire ecosystem. Don't just keep the brain power at the center of things that then go out and tell everybody you want. Make it consultative. Make it very much that collaboration, that composable way of thinking, that composable way of banking that's going to build Something very unique for you, but actually taking the best practice from everybody within that ecosystem. I'll give you a very simple example. Most people have done a core system replacement when working in a bank or building society 3-4 times in their career if they're lucky and they're very experienced. Mambu is an example. We've done hundreds of them. Why not use our experience in what that looks like? Not just from a technology, but what is everybody else doing? What is the best practice? What do we see work? What do we see not work? That is ecosystem thinking. You take that and put all the other pieces of the puzzle together and all of those other vendors and everybody else in that composable marketplace, the rewards become exponential. So that's very high level for me. I mean, please do, I'm sure we've got Q&A taking place. Also, my colleague, James Barker, is going to be having a deeper dive a little later around how can building societies thrive around uncertainty, and he'll also be available for questions. Feel free to reach out after the after the session as well. More than happy to collaborate, talk about any of the points I've covered, and happy to take the conversation further. Please stay with the main stage and enjoy the rest of the conversations.